It's Monday once again. What is your focus right now? Because, of course, the tech sector has been in focus through the Asia session, but are we also seeing developments in the Middle East cutting through into the Asia session? A substantially higher oil price, of course, doesn't play well for some of the nations that you're watching.
Yes, good morning, Anna. So a colleague said to me, a flippant, off-the-cuff remark, there's just one narrative today, it's all about the Middle East. And I said, no, I think that there's two narratives here, right? Because while things are moving the way that you would expect from the Middle East playbook perspective, so we've got stocks down, we've got bonds down, we've got stronger dollar, we've got weaker precious metals, a lot of the same trades that we saw when the tensions were at their height earlier on in the year. The move in equities is much stronger relative to the move in other markets. And that's also because this, the sell-off in SK Hynix really is catalyzing another downdraft for AI stocks overall. I think for SK Hynix, there's a few things going on. One, this is, a diluting for the existing shares in South Korea. If you think about it, they haven't, I saw someone joking, they haven't done this share sale of ADRs in the US to pay back dividends or do a buyback, is it? It's because they want to invest more. So there is going to be that big spending drag on the share. We've seen foreign investors putting cash out, suggesting maybe selling the South Korean stock in order to buy the ADRs. And on top of that, I think that there's just the ongoing concern about those spending plans with earnings coming up. So that overall contributed to a bigger drop in the tech stocks than you might expect just from the Middle East tensions alone.
And Paul, you mentioned the sell-off in bonds, and obviously the fact that oil ties into that. Higher oil prices typically means higher yields. When it comes to the trajectory from here then for the bond markets, is it US inflation data tomorrow or Warsh's testimony that's going to be more important?
Yes, Tom, both are important, but I think the market is going to be paying a lot of attention to Warsh and what he has to say. We had the Fed minutes. The Fed minutes was interesting. It didn't just indicate, the concerns about inflation from an oil market perspective, but also the concern that AI is actually inflationary in the short term, the idea being it's pushing up consumer goods costs. So it'll be interesting to see whether he labours on that very much, lingers on that. The market has moved back to pricing in the Fed much earlier as a result of the latest Middle East tensions. We have 2-year yields at the highest since early last year. So, the market is getting more and more worried about the need for the Fed to act sooner.
And Paul, are you watching the earnings season this week? It certainly kicks off stateside, but what's in focus for you?
Yeah, I think that Tuesday is going to be an extremely busy day for earnings, with the US banks kicking things off. I think that on our side, we had the TSMC sales today, but we get fuller earnings on Thursday. I think that that's going to be pretty critical given where we are with this AI cycle. And I think that in general, people are going to be looking for across the earnings season to the AI companies to see what their capex plans look like and what their hopes for returns on all of those investments are, because that's really been the overriding concern that's clouded markets in the second half of this year.